Okay, hello everyone, and welcome to this live intraday strategy webinar, pre-FOMC coverage. Today is Wednesday, July 29th, and I'm Michael Boutros. Good to be here with you this morning. Andrew, Ben, Bernard, Daniel, Depeche, Kyle, Mark, great to see you guys. So, FOMC is on tap at 2 p.m. Eastern today. We'll go over some of the dollar crosses and what we're looking for ahead of this release. Good morning to you guys. Eileen says Kiwi looks good in place to go long now, but don't want to try anything with FOMC in a few hours. We'll take a look at the Kiwi. It has taken a little bit of a dive, a little bit deeper than I would have liked to see, back below the median line. Here's what the 30-minute chart looks like. I would have liked to see us hold this level, but the setup still looks good. Yeah, I'm not going to necessarily take any position off of this level here. We'll see what the U.S. opening range looks like, Eileen. It's actually coming into some support. But we will take a look at that in a couple of minutes for sure. As always, guys, feel free to throw out any questions, trade setups that you want to review as we go through the session here. Okay. So let's get started. First things first, relative performance of the greenback ahead of this release. Here's what the dollar index looks like. So I posted this yesterday on the intraday charts, guys, on the radar. Here's what the dollar was looking at. We really wanted to highlight this area of confluence support, and it was basically 11,985 into 11,980. This same chart was actually posted the day before on the radar chart, and that was the level that we had highlighted as an area of key support. It was at 11,985, 11,980. As a level of which you would expect to see a little bit more support. Dollar index coming into that level overnight, obviously have a major event risk for the greenback heading into today's session. Unlikely you'll see a major break of support for the dollar pairs specifically ahead of those releases, and that's, inevitably overnight did cause a little bit of a rebound there. So we are looking higher in the dollar index off of that rebound. Here's what the intraday chart looked like last night. We were just coming into that about an hour into the Asian trade session, and momentum was showing us some divergence. Now, it's very important to note, again, you need to have a concerted low into place before you can call a divergence, but just in relative positioning of where price was, you are already seeing that divergent signal start to come out. So, long story short, on the 30-minute, you did see that level inevitably give us the kickback. It did turn out to be a pretty strong divergent signal, and there was actually a long trigger that gave out just ahead of the open of European trade, deep into the Asia session. Okay, so near-term resistance, and this is the thing that might be having me a little bit reluctant to take any positioning right now, Eileen, right ahead of the release, is near-term resistance, for me at least, isn't really until, this would be the ideal area of which I'd like to get back into a dollar short, and that's right around 12,020. It was a swing low that you made back here last week. It was the initial opening range high for the previous week, and right now it does coincide with the upper median line parallel for this proposed pitchfork. So this is an area of which I would be much more inclined to take a long dollar or a short dollar position long calm currency against the dollar. From a relative positioning standpoint. This is still the key support structure that you're looking at for the session. Again, the daily chart, it still highlights this major key region. A break below this, there's really nothing of consequence until you get down to like 11,937. Okay, and that's a little bit of a range to the downside here for the dollar index. Also wanted to point out, and I pointed this out on the radar chart yesterday, that support trigger we've been watching is still in play. We looked like it was making a couple of tags of it over the last few days, but we're still continuing to hold above that. A push through this region and a break below that trend line trigger would really open up a much steeper correctionary move here for the greenback. So that's the scenario we're heading into for the Fed later this afternoon. A quick brief on what we're expecting from that standpoint. Here's the link, by the way, guys, so you can follow along. When that release comes out, you will see. I just sent that link out to everyone. When the release comes out, you'll see the new statement pop up right here. Here's what the old statement looked like. And I just wanted to highlight this one part of the paragraph, guys. We're not too big on fundies here, but the things that we want to be looking for to know or to kind of ascertain what we should be expecting the market to react is basically this part of the paragraph right here, where it says the committee anticipates that it will be appropriate to raise the target range for the federal funds rate when it has seen further improvement in the labor market and is reasonably confident that inflation will move back to its 2% objective over the medium term. So that extended period language, all that stuff has been out the window for a couple of months now. Any changes to this, if they soften that, or if it's a little bit more of an aggressive, markets should be prepping, the Federal Market Committee seems confident that we are achieving that, or anything to that degree, where they're basically prepping markets for a move either in September. December is probably more likely. I'm still in the base camp that we're probably not going to see anything until 2016, but that's just my personal opinion. Either way, that's what today's event is going to be about. The other and last thing you'll want to look for is whether there's any dissenters, okay? And if there is more than one dissenter, we've seen Jeffrey Lacker, who's been kind of a regular dissenter against the current status quo for the ZIRP policy. If we do see that there is more dissension amongst the committee, it shows that there is a more willingness for them to start to normalize policy. And of course, if that is the case, that would be dollar constructive. Okay, so a lot of the pullback we've been seeing here is because of the concerns we've been seeing in China, the concerns we've been seeing with the relative sell-off that we've seen in risk assets, and all these things continue to put pressure on the Fed, right? They can't start to move on rates right now with markets falling off a cliff. You got the issues that's going on in China, like I said. And then not only that, but raising rates is only going to propagate further dollar strength. And what's not going to do, it's going to subdue inflation even more so. And inflation is, out of their dual mandate, the laggard. So keep your eyes peeled for that. I really don't think, again, just my personal opinion, guys, I really don't think we're going to get all that much new relative data from today's release. The Humphrey Hawkins testimony, as I said this yesterday, I don't want to beat this topic up, but we really got a lot of information out of her last week. We know where they stand, data dependent, yada, yada, yada. Long story short, it's unlikely that they're going to move on rates today, A. And B, there's nothing new earth-shattering data-wise that has come out that would really propagate them to make them do something, out of the ordinary or ahead of schedule. Let's say that. So these are the key levels we'll be wanting to watch for the greenback heading into today's session. Keep that radar chart ahead of you when you're going into the release. A downside break below that 980, 985 key region of support. Look for that median line. That median line coincides on a soft support target that we mapped out, 11,965. Has been a decent pivot in price here, and that's the median line. And below that, you're looking at a basic 38.2 of the entire rally. And like I said, that's 937, same thing that we looked at on the daily chart. All right, so the dollar breakdown, it's a make or break it level right here at 985, 980. Any questions on the greenback? Eileen says, glad to see the dollar 30-minute chart on the US dollar lately. Can more clearly see it right in the middle of things over the daily chart. So you enjoy that, Eileen? You find that more helpful? Okay, I'll include that more often. I try not to stress the 30-minute Eileen for the dollar chart simply because it excludes a lot of our U.S. client base for guys who are trading here on the stateside that can't really scalp it. But as we always say, it's a great barometer for base dollar movements. So even for those of you who are unable to trade this asset, it can be a great tell on what price action is doing for the greenback. All right. So watch that key support as we head into the U.S. session. Okay, we'll go over dollar, yen, and sterling in just a minute. Those were the other two charts from the radar chart. I just really wanted to highlight the key levels that we're looking for on the greenback heading into the event risk later this afternoon. Bearish invalidation remains 12,020, 12,019 to be exact, and we'll work with those levels as we head into today's session. With yesterday's intraday update, it was a busy day. You had Aussie Kiwi on tap. Kiwi dollar was a setup actually I highlighted on Daily FX as well. Dollar CAD finally materialized. I don't know if you guys took note, but I don't know who asked that. There was a couple of you guys who was asking yesterday about the dollar CAD setup. It went through all three targets that we talked about like an hour after the webinar ended. So I hope some of you were able to catch that. But I guess we should just start off with that first thing. Here's what dollar CAD looked like yesterday. If you guys recall, during the webinar, we were sitting right here on this median line. And in fact, the 30-minute chart was sitting right on that median line. And we even said, you know what, 130 is the soft target. We'll work with that. A break below that, you're looking for that the 129.69 target, which was the 618 extension from the decline off the highs, or from the decline off the highs. And it also had a confluence region there with the median line. A break lower, you had a really clean 100% extension, which actually coincided pretty nicely with last week's low. Okay, and that was at 129.22, 129.21.7. And a subsequent break below that is 28.73, a little bit bigger of a region of support. We've gotten stuck at this region, and we're kind of sitting here sideways. Here's what it looks like now. The daily first. Okay, so we did inevitably see that turnaround. We took out, we're sitting at last week's lows, but we took out that trend line and closed below it with conviction. Momentum back below 70. Haven't broken the operative trigger yet, dating back to the lows we made for, what month was that? That was May, right? It's got a ways to go before you hit that one. But here's what the scalp looks like. So that level continued to hold as a pretty decent support at 129.20. You can see we made a little bit of a rally here in overnight trade with the break back above that 30 level. We came right back into the median line. This is the near term. Near term, we're looking to stay bearish below that median line. Okay, the broader bearish invalidation is way up here. I know that might seem like a stretch for the scalps guys, but remember, you're looking for short triggers on the way up here. If you don't get any, we don't take any. Very simple. There was one short trigger that might have faked out a couple of people right here. I was not awake during this, but when I saw it this morning, I kind of cringed because it looked like I would have been right on board on that scalp. And you know what? If you had taken it, you actually would have gotten the 26 pip scalp. So even on these really sharp triggers, all that matters is that you have conviction on the trigger. And this was a 1, 2, 3, 3 tag support. That's all the validation you need. And was a nice scalp to the downside here back into that 100% extension. So look for a break of this range here in US trade. If you do see a topside breach, again, I'm not going to be necessarily interested in playing the rally. Although I would be looking for a reaction on FOMC. So if it spikes into this level here and it's a broader bearish reaction, this would be a nice fade move with a short against this region. At the end of the day, if they come out with a strong suggestive language that they will be moving on interest rates forthcoming, a break above 30.45 puts the longs right back in control. And such a scenario, you're basically looking right back at this key region. Okay, it's the same exact level. And then right back up into 31.67. So the levels for dollar CAD finally clearing up here, and I think we have a lot more to work with than we did over the last couple of weeks where this thing was just chopping sideways up against the highs here. So broadly looking lower, below 130.45, a break below 129.20. You're looking for 128.70, and 128.45 also comes into play later in what is that? Late Asia, early Europe tonight. Momentum signature looks pretty right on as well. You're holding, turning ahead of 60 on every single approach to the upside. You have multiple breaks below 40. This last divot ahead of 40 here looks like we might keep a range-bound trade ahead of the FOMC. So again, keep your eye on the broader dollar price action here as we move into the U.S. trade session. Any questions on dollar CAD? It was a very there's a lot of interest here yesterday in the room with you guys on this one, so I thought I'd jump on this one pretty quick. And again, this is just the beginning of the cusp of the turn, right? We're not necessarily calling a high in dollar CAD, but suggestive nature. We've seen a marked change in behavior in the momentum profile. We've made an objective break to the downside of not only that median line parallel that we've been following for some time, But also just the initial weekly opening range was an objective break right below that 129.80 region. So the hallmarks of a near-term reversal is there. The thing in my mind that would sort of give me the validation to maybe up the leverage on the shorts here is if we finally break below that last week's low. This is sort of a nice region of which if we clear, I'd be looking for a more of a stringent or more of a significant support, let's say, more closer down to that 28.50, 28.45 level. All right, so that is dollar CAD right in view. Next up on the menu was the Aussie Kiwi, another trade that we've been following for weeks and weeks at this point. Listen, we've come into a major key support, another trade that we sat neutral on this last night, and I typically won't put out a scalp on the update, guys, if it's neutral, but we've been following it every single day for like the last couple of weeks, and I just wanted to make sure that, we're on the same page. 109.14, 109.13 into 109.20 was such a huge area of support. We worked on a 4-day stretch to the downside ahead of today's trade session. You're looking at the S1 monthly pivot. You're looking at a basic 236 retracement, the June opening range high, the median line off of the highs, all stacked up in this region. And even on the near-term chart, you can see, whoops, wrong tool. You can see just some basic channeling, okay? Just trendline resistance connecting the peaks, trendline support connecting the lows. Nice convergence right here on that low that we made yesterday. And that low actually stretched right into that 38.2 at 108.91. I think we turned at 108.93, like 2 pips ahead of it. Long story short, it's vulnerable here for a rebound, a recovery, whatever you want to call it. And that play doesn't really materialize until you break back above this region. And that was the former 100% extension off the highs. So if we break back above that, yeah, you do risk a run into maybe the upper median line parallel. I really wouldn't be looking quite that high. The former low day close comes in right around 110.47. Depending on where we are in time, we'll see what the high is. But if this breaks, it's going to invalidate our short bias. The short bias has worked for us really well since the reversal that we saw last week. At this point, like I said, you're coming into a big area of support. So we just want to highlight that. And as long as that support holds, we're going to sit pat on any type of short exposure. The only reason or the only level of which I'd like to get back on the short side is if we get back towards 110.47. Okay, I'd be interested in looking for some short exposure there again, right? Or if you see the final break, inevitable break below that key support, I'd be looking for a rebound back higher to get back on the short side, looking to aim for this, which would be our next major key target, and you're looking at 107.25 into 107.09. Okay? Soft targets at 108.50, 108. I noted that in yesterday's update, but the major support you'd be looking for is down here at 107.26, 107.09. This is all contingent, by the way, of this support break. Until this support breaks, until this resistance breaks, we're just neutral in this region right here. Okay? Any questions on Aussie CAD? It's been an exquisite setup. We just really need to limit our expectations here because this is a massive support. And as long as that sits there, I'm not going to really look to play any shorts into a key support level. By the way, one other thing I did want to note, if you do see the break, I wouldn't really be stressing that trigger so much as much as I would just the confluence of the former resistance trigger that gave us a really nice signal here on the breakout day that we made on the 23rd of April. And then the support trigger off the lows, which just comes above the 40 level in general. So we've seen 70 break, 70 break, 70 break. If this is a material turnaround, that 40 level would need to give out, and that would give us a much steeper correction. As it stands now, you're at risk for a little bit of a pop higher. Questions on Aussie Key? And again, yesterday we also noted on the update the divergence that you're seeing into the lows here. Price action making a lower low, the oscillator making a higher low. One of the reference points below 30, one above 30. Typically pretty strong signals of waning momentum. You're just waiting to that 60 break, that move back above 109.65, 109.64. Look to play the rally back towards 110.47. This is a trade. Raj, he says he's been having a rough month here, Raj. No worries, my man. Again, you're going to have rough months. We're going to have rough weeks. It's the long haul. We're in it for the long haul, right, my man? Keep your chin up. No worries. On a trade like this, it's something that you want to keep intact that will be somewhat dollar benign, right? So when you get major dollar event risk, NFPs, FOMC, CPI prints, employment data gauges, ISM manufacturing prints, things that are a little bit more data heavy, it just sometimes helps to focus your attention away from the dollar crosses. And this is one that I've focused on since the start of the week, just on that premise. So Raj, smaller ATR here might be something that you want to just keep your eyes on as an alternative to some of the dollar crosses. All right. Last but not least, from last night's update, we do want to just touch base on the Kiwi dollar trade. So, again, like I said, I put a piece on this yesterday on Daily FX. Right ahead of some of those comments that Wheeler said. It never ceases to amaze me, the reaction that the market will give you guys on essentially what is the same exact nonsense that you will hear time and time and time and time again. Last night, or I wouldn't even say last night, yesterday afternoon, right after, cheers to you as well, Raj, no worries, my man. Right after the close of U.S. trade, Wheeler comes out with the same exact, it seemed like it was copy-paste from his speech at the last interest rate decision. But, just to give you a quick sort of like recap, Wheeler yesterday coming out and says some further easing seems likely. He says more substantial Kiwi depreciation is required. Sees several risks around the inflation outlook. Further depreciation in the Kiwi dollar is necessary. Several factors are supporting economic growth. Aim is to return to 2% inflation 9 to 12 months. It's all the same exact thing. But what happened? Charged a massive drop. Okay. And then this thing just rocketed right through the highs. Now, the scalp setup that was posted on Daily FX yesterday, and certainly the SB post, was a constructive one. The picture turned for us yesterday, especially for me. When I was writing the Daily FX post, we hadn't closed the market. It was actually we were actually just testing that. But the fact that we've broken through the upper median line parallel at this point, we closed above it. Momentum has cleared 40 for the first time since back here. Okay, and this staged a pretty decent rally into the upper median line parallel. We've now broken that upper median line parallel as we broke 40 in momentum. Okay, so we could come back, test this as support. We're broadly staying constructive above 66.20, okay, which at this point still represents the lower median line parallel for the formation off of the lows, as well as the former upper median line parallel that we broke out of yesterday. And that coincides right around 66.20, like I said. We're going to stay constructive above this region. A break below 65.97, that swing low, is what we would need to get the conviction to short the trade again. Okay, and that level on the daily chart actually coincides dead on with the S1 monthly pivot and yesterday's low. So the levels are extremely clear, Right now, again, heading into the FOMC, I'm much more reserved. I'm still looking for the long side of the trade. Momentum, I would love to see a 40 hold here in momentum. That would give us a lot more confidence on the setup. But broadly looking to buy pullbacks, looking for resistance trigger breaks while above this region. Targets on the long side, 67.50, 100% extension off the low. 67.91 coincides pretty nicely over the next few hours with the upper median line parallel, essentially heading into the close of U.S. trade today. I know that Jamie's looking at 68.10 or 68 and change here. 68.15 I think he was talking about, which is this swing low that you made back here on the 23rd of June. Depending on where you are in time, this is going to be the operative resistance that you're looking for. A basic 236 off the high, though, does take you into 67.91 first. So another one we'll be watching the levels very closely, but still favoring the long side while above 66.20. Let me take a quick look, by the way, what the 5-minute chart looks like on Kiwi right now. Yeah, you don't really have any compelling long triggers to work with right here. There was some divergence into the lows, but not much of a long trigger. So we'll see if we can get something here, maybe another pullback to use this high as something to get back on the long, but no levels here to work with. One other thing I just want to take into account real quick, guys, just bear with me, is a basic retracement off the lows. I do want to see if we've completed any significant ratios. Looks like a 38.2 is holding up the support there. We'll put this in a light gray. We're not really working with this as an operative level, just near term. Some levels want to keep into account. Hey, look at that, 618 of the range. Same exact level as our near-term bullish invalidation. Okay? Nice. So the way you want to play these dollar pairs, guys, is that you want to, the release, if you get a stretch into the release. So let's say they come out and the release is exactly the same. There's no change. The language, the verbiage is the same. We're waiting for the 2% inflation target. We're waiting for us to be confident about inflation. All this qualitative standards, which for markets and market participants like us doesn't mean anything. What does them being confident mean to me as a trader? How do I know if an NFP print of 350 is confident or 300 is confident, right? And this is the problem that you've seen in the markets with this attempt for the Fed to be transparent, right? Is they've tried to give us more qualitative verbiage of what they're looking for, but again, it's very subjective, or it's very subjective. So it's not something where they're saying we're looking to 2% inflation, we're looking for 5.3% unemployment, and then once we reach these targets, we'll move on rates. No, right? Because they've already said, yeah, we've reached the 5.4 unemployment, but we're looking at other things other than the headline employment figure. The labor force participation, wage growth seems static, yada, yada, yada. We're looking at the inflation picture. It's lower than 2% now, but we're expecting that the 2% inflation target will start to pick up. It's being held down by transitory factors. So this type of confusion in an attempt to be transparent is what has been causing all this market chaos, with everyone hanging on every word that every central bank official says. So if we do see, for example, the statement is the same, and you see a sudden dollar surge, that to me, in my mind, is a quick fade. So if the statement comes out, there's no change whatsoever, and all of a sudden, the Kiwi drops right into this key zone, for me, that's a buy opportunity. Okay? It's a buy opportunity against that low, and we'll see if we get the rebound. If you get stopped out, no problem. 20 pips, we're looking for about 20 pips. It's a 20 pip stop. Right? Let's say the other thing happens, and they come out and say, we're confident. The data has been very, very convincing, and the Fed looks like we're going to be looking to move on rates in the coming months. Something to that effect. I don't know what language they'll use. And the dollar sells off, right, in such a scenario. And this thing surges into a new high. In that type of scenario, you would actually want to fade the move again, because you know that it's going to be positive for the dollar. If the expectations are being brought forward for rates, that's something you'll want to fade again. So if the dollar goes in the opposite direction, guys, of what I'm basically trying to tell you, if the dollar goes in the opposite direction of what the interpreted message is being said, that's when you want to fade the move. Okay. That being said, on a flat slate there, guys, there's not really much that's going to come out new today. And if markets take it in stride, you might not even get any volatility at all. So if that's the case, we're going to stick to the game plan. All the levels will remain pat. We'll continue to remain constructive here on Kiwi above 66.25, 66.20. looking for a topside target just above that 67.50 level, which would complete a basic 100 off the low. Any questions on Kiwi dollar, Aussie Kiwi, or dollar CAD from yesterday's intraday update? Raj saying, Mike, is there a midweek strategy webinar today? No. Good question, Raj. Thanks for bringing that up. Guys, actually, the midweek strategy webinar is pushed back till Thursday. So that'll be tomorrow with Jamie. It doesn't make much sense to go over a midweek longer-term strategy webinar in the midst of the interest rate release, which will be just an hour after that. So tomorrow we'll have the midweek strategy webinar, same time, no change there. Will you look at the euro dollar at the same time as far as fading at the FOMC release? Eileen, absolutely, right? It's all dependent on where the market is trading at the time of the release. So I pointed out to you the pairs that, for me, in my mind, make the most sense. In the event of a weak dollar, I'm much more going to be favorable to playing the Kiwi dollar long and the dollar CAD short. On a weak dollar, or on a strong dollar print, I'd much rather be playing the dollar yen long, maybe, or even the euro short in that case, actually. So if there's no other questions on this, we'll come back to this again. I do really want to see if that 40 level holds in momentum. So I'm going to keep this here on this side, and I'll bring it back if anything happens here ahead of the release. But let's jump into euro dollar. So here's what good old euro is doing on the daily. So we had that operative break on Monday that took us above the sliding parallel off the highs. Momentum has been giving me some dirty looks here on this attempt to break through this trendline resistance for the third day, just sitting right there. I don't even know what to do with this, Eileen. So I've kind of strayed away from the euro ever since that breakout. It did come into a really nice level from the scalp standpoint, right? It was an exact 50% retracement off the highs. We went over this setup. It was on Monday's release, or the Sunday update, rather. So it came into a nice level. We went over this in yesterday's webinar as this thing was testing resistance right here. The opening range for the U.S. Session never broke, okay? And in fact, at the close of U.S. trade, or into the close of U.S. trade, this thing popped right through. And then here we are right back at that same support we were trading at yesterday during the webinar. So it's kind of frustrating for me, Eileen. I think you sit sideways here. I'd like to bring up the bullish invalidation level to this region at this point to take into account the slope that we've been working with. So if you break back below 110.30, I wouldn't want to be on the long side anymore. So on a strong dollar print, if we break back below this, I'd like to sell rallies into 110, 109.67, and more importantly, a little bit more of a technically significant level right at that 109.30, which has been a pretty decent pivot in price. Okay, and in fact, you also have a trendline confluence right down there as well. So I just don't like where we are, relatively speaking, guys. One thing I can tell you again, Eileen, with this, is that look at the momentum signature on the last two pullbacks. You see how that's held 40? So I'm not really too keen on playing the short side yet. But what I'm trying to tell you is this. It's going to give us a really clean move on the break once we do get it, if that offers any help whatsoever, Eileen. Meaning the rally and overnight trade came into 60 and it held resistance and momentum. The breakdown held 40 and it held support in price. So if we break through 60, we make it back above the median line, great. We'll continue to favor the long side. If we break below the bullish invalidation level, we break back below 40, great. We'll favor the short side. And a lot of this, guys, with trading, especially coming into event risk, is waiting for the market to give you the clarity. There's a propensity for us on near-term trades to always want to be in a position. Waiting for your entry is just as important as knowing the right direction of the trade. Raj, I see your comment there as far as, getting upset on a losing trade. That's a huge part of trading, my man. I'm just going to address that real quick. Um, how you take a loss, Raj, and by the way, I appreciate your comment there saying, Mike, by the way, good shout on the dollar cat yesterday. Again, guys, you're the ones bringing up the pairs. I'm just giving you the levels, so well done on trading it, Raj. But how you take a loss is going to be directly correlated with how good of a trader you guys are. And I can tell you that from just watching traders on the desk around me over the years. Um, if you're trading with emotion and you find that when you take a loss, you're extremely upset, and let me just take a step back. You have to be able to accept a loss, right? If you're trading with emotion, no one likes to lose, Raj. A loss sucks, right? It's horrible. But if you're trading with emotion, it's going to lead to a whole series of it's a snowball effect. So as a trader, you want to be as robotic as possible. I know it's a very, very hard thing to suggest, but no emotions in play. If the stop hits, instead of saying, damn it, that stop hit, you should be saying, thank goodness, that could have been a lot worse, right? And even if the trade comes back, all right, great. Actually, my analysis was on point. Maybe my stop was a little too tight. Let's give it another shot. You got to always be looking ahead, man, okay? I don't want you to dwell on any one trade. I'm glad to see that you took advantage of that dollar CAD yesterday, but I hope that offers some words of encouragement. So just keep looking ahead, man, and don't get too emotionally vested in any one trade. Yeah, he says, I only get annoyed when the trade starts to come in our way and then it comes back to break even. And again, Raj, that's going to happen. You have to keep in mind, what your objectives are. If you're looking to play the swings and you're looking for those bigger moves, sure, take 4, 5, 6 break-even moves because the winner is going to be a couple hundred pips. Right, Raj? Whereas if I'm scalping, yeah, if I get 29 pips, I'm going to take it. Right? It's a difference in strategy. So you got to make sure that you're keeping in mind, what your objectives are on the position. Kelly, great to see you. Says, hi, pal. I was making notes on the Kiwi dollar, and we are looking for the RSI to hold over 40. I was curious, what is it at now? Thanks. For Kiwi, it's the low, let me tell you exactly, it was around 48, 48.83. Oh, that's what it's trading at now. The low is right around 42. Kelly, does that help? Raj says, that's true, Mike. Thanks. Yeah, you're more than welcome, Raj. You're more than welcome, man. And feel free to throw out any questions you guys have, as always. The low 42 current is low 42. The current is 48.9. It's right here. Make sense? She says, got it. Thanks. All right. Great seeing the room, Kelly. So that's what we'll be looking at with the euro dollar. Again, one thing actually I was talking with Jamie about this last night. And while the near-term structure did focus us to the long side earlier in the week, the broader picture hasn't really broken any major resistance levels yet. And the first thing I was looking at, and the first thing I said to him was 1140, and that's the funny thing because he said 1139 and change. I think he was looking at a different platform, but we're basically looking at the monthly open. And if the monthly open does give out, in my mind, that to me would be a much stronger indication of a reversal play here in the euro. And such a scenario, you better damn well believe that this is going to be above 50 by that point. So, for me, that would complete the picture for a correction in the euro and a rebound higher, especially from the momentum signature above 60, 40 hold, breach, right? So could be still in play. You haven't really cleared anything yet to play the euro breakout, as it were. Near term, the focus is still up to the upside above this region. But on the broader trade, you really do need to clear that monthly open to make way for some further advances in the euro. Depeche says, dollar CAD heading south again. Yeah, so we went over this earlier, right, Depeche? I'm not really going to be looking to play a dollar CAD short into support from this level. Let me see what that trigger looks like anyway. Yeah, so this trigger actually gave out ahead of the U.S. Ahead of our webinar open here. This is around 8 o'clock, 8:10. You got the trigger break around 8:25. You check the trigger as resistance. Stop against, well, in fact, actually, this would have been the trigger on the downside here with the stop against the highs. That would have been the play. That was about 45 minutes ago. From this level here, your stop would need to be way up here at this point. And you're basically looking for about 25 pips. So you're right back where you started on this one, Deepesh. That's chasing, man, right? We don't want to start doing this ahead of the U.S. session. So make sure we keep our risk to rewards on point here. All right, so those are the three setups that we're following on the intraday chart. A real quick update on the charts from the radar charts that we talked about yesterday. We talked about the dollar index. I just want to touch really quick on the dollar yen, typically a very strong reactor to U.S. data. Here's what the dollar yen looks like on the daily. Here's what it looked like yesterday. The only thing I wanted to highlight here, guys, not necessarily a play, but the major key slope support that we've been watching since the start of the week is still being respected, specifically on a close basis, right? Quick way to find that out is bring it into a line chart, and you can see how clean that has been. So that's the level of support to watch heading into the U.S. trade session, heading into the event risk on a weak dollar story. A break below the 38.2 specifically, which is like 22.90, is what would give me a nice short for the dollar CAD bias from a scalp standpoint, looking to sell rallies in that standpoint. Here's what the 30-minute looks like. So you can see, again, that slope support almost caught the lows perfectly earlier in the week. You saw a little bit rebound here, straddling that lower median line parallel. Excuse me. Both of the rallies in overnight trade holding 60 as resistance. So very strong correlation with U.S. yields, and like I said, tends to be a very strong mover with U.S. data. So on the dollar yen, more than anything, you have a very clean, objective weekly opening range. So here's your weekly opening range high. And here's your weekly opening range low. Whoops. So objectively, this is kind of the range that you'd want to see cleared for the euro dollar to get the conviction. I am favoring a downside while below 124.46. We've been favoring the downside ever since last week when we came to this, but you just didn't get any pushback all the way into the close of the week. I mean, even when you broke the weekly opening range, the thing just sat there for the entire remainder of the week. So I do like a downside break of this formation, but I can't favor shorts, or I can't advocate shorts, guys, until you get through. Okay, you're sitting at support. So keep this level in mind, keep this range, these slope lines in mind, and once you get through that, we'll look for open rain into 122.95, and then a much more significant key support heading down there into 121.50, 121.80. Key resistance, 24.35, 24.13, and certainly a pop right back above this puts the long resumption right back into play. Such a scenario, you'll also want to see 60 break here in momentum, and that would give us the conviction for the resumption of the broader uptrend. So another one that's on the radar heading into today's release. Also, just wanted to point out, remember that outside day reversal we talked about last week? Here's a scenario where it actually panned out really well. It was a slow burning trade, but the outside day reversal at the highs, at resistance, panned out. Whereas the dollar index gave us a fake out. Outside day reversal at the high, at resistance, played out into a new low a couple days later, but then we broke that high. So you're going to need a little bit more conviction on the reversal here in the greenback, where the dollar yen is kind of poised just for a breakdown here. And that's going to be the breakdown level I'll be looking for on Mr. Yen. Last but not least is the sterling. So again, on the radar chart, this was actually an operable trade in overnight if you caught it, guys. I highlighted this resistance trigger in momentum. And, near-term resistance at 56.20. You had the upper median line parallel there for the formation we've been following. You had a basic 764 retracement and the weekly high all stacked up into that region. An overnight trade. Sterling plowing right through that. Pullback, plowed right through that region. Just missed the topside objective here, which was 56.97, the highs. The high, 56.69. The high, 56.66, 65. So, here's what it looks like on the daily. And again, you see how many times we came into this region, guys? There's not a fib there. It's just resistance. So take it for what it's worth. I have no plays on the sterling at all this week, which is why, again, I have it on the radar chart. Even if you did take that scalp last night, I really wouldn't be playing anything beyond this unless we break through this region. I just want to see if this slope actually connects. Ooh. Oh, wow. Real clean. Yeah, I really just don't have clarity on this for the sterling, guys. I'd love to see a tag into like 50 to complete a 618 and then a reversal. Also, let's just see if we've completed any major extensions with that rally. $56.80, $56.99, yeah. Still the same region. So coming towards near or coming into some near-term resistance here, just a bit higher from where we are. But you know, the short side was well invalidated earlier this week with the break back above that 55.55. I think the invalidation level from Sundays was 56.66 or something. Long story short, you know, you look for a rally into resistance. I still wouldn't look to fade it unless it's a really strong dollar story. That being said, look for that 56.79, 56.99 barrier for the sterling. Another one that's on the radar. I think along with dollar yen, those two should give us some sort of near-term clarity over the next 24 hours. That being said, focus on dollar CAD, focus on the Kiwi dollar. Aussie Kiwi, if it gives you that bounce, I think it would be a really nice setup. In fact, especially if you play the Kiwi on the FOMC release, it'd be a nice way to possibly offset some of the risk, because Aussie Kiwi does seem like it's poised for at least a little bit of a rebound. It's such a major critical support that we're trading at right now. I would be surprised if this thing just broke down from here. I really would. And if it does, it's probably going to be a pretty steep drop. Just remember, these slope lines have offered some radical reversals, right? Very, very low tolerance. So I don't suspect that we'll spend too much time in that region. All right, so those are the highlighted setups from yesterday's work. I want to leave the floor open here to your questions. Any setups or pairs that you guys want to look at, I'll be more than happy to review. A quick look at gold, which will typically also be a big player on some of these FOMC releases. You know, the correlation with gold, specifically with the expectations for higher rates for the United States, may be a factor in today's play. Remember, the gold weekly well, this is the daily chart, just to give you a quick reminder. So the median line parallel, which is much cleaner actually on the weekly chart. And again, I showed you this yesterday, so I don't want to beat this up too much, but just in case, if you guys need to take a picture for your own records, here's the weekly chart. Here's the daily chart. That is daily, right? Yeah. And you can see there's been pretty much moot price action this entire week so far. I still think the risk is to the upside. So it kind of coincides with a possible weaker dollar story. If the dollar spikes into a new high, maybe gold spikes into, you know, 1072 again, or that former 2006 trendline support, and then reverses higher. I don't know. If the dollar really does make a monumental push higher, if they really come out with some strong verbiage and you break through resistance on the index, remember that resistance on the index, 12,070 something? Initial 12,020. If you break through this resistance on the index, and gold makes it through 10,072, look for 1044, 2010 lows, and then major critical support down here at 980, 975. So on a day like today, I'd be much more willing to try to play the corollary play with the dollar and gold, just because there's no concerns about inflation. Classic uses for gold are a hedge against inflationary pressures and safe haven bids, right? I don't necessarily think you'll see safe haven bids today actually be a major play, but interest rate expectations should certainly shift some of the dynamics you're seeing here in gold. All right, so the near-term risk still remains to the upside against 1072. For crude, here's the levels. We talked about this yesterday. Actually, bringing up that 786 retracement to a 764, guys, actually worked out pretty well. That turned out to be the low, and it's still holding. So momentum made its way back above 30. Like I said, if you see the dollar pull back, you could see a rally back up into 50, 49.80. This is still the bearish invalidation level. Even if it gets this high, the crude trade remains weighted to the downside. So resistance at 49.80, 50 level, a support break below 46.80, and we'll look for the 2015 low day close, which is the same as the reversal day, and that comes in at 44.60. So crude, might not be out of the woods yet, even if you get a rebound here, but certainly the levels have been playing out exceptionally well. Some quick look at some of the equity markets that we talked about yesterday. You guys remember that resistance zone that we highlighted for the DAX? Yeah. It caught the highs yesterday, it held, and it's still catching the highs here today. You're basically looking at the upper median line parallel for the descending formation off the yearly highs and the rising wedge, the rising formation off the lows here. A nice near-term region of resistance. Risk is weighted to the downside below that. Note that at the rally that you saw that took us through last month's high, momentum couldn't even make it through 60. So if anything, it's more of a range-bound market here because we've been holding 40, 60 on the rebounds for the last 3 months, essentially. So, look for that to change. Near-term resistance into the 11,286. Key support or near-term support, you're basically looking at 10,980 and 10,900. SPX, a little bit more of a messy picture. This broke through that resistance that we highlighted yesterday. And again, that's now support. So 2088, 2087, look for some support there. On the SPOOs. All right, so guys, if there are no other questions, we will go ahead and wrap things up here. Just a quick refreshment here on the relative performance so far that you're seeing versus the dollar. You're seeing it pick up some pace here. So the dollar is stronger against the Kiwi, Yen, CAD, Euro, Aussie today. Sterling with a push higher up 0.25%. Swissy pretty much flat on the session. Heading into the U.S. session, you do have some data on the docket with existing pending home sales on tap at 10 o'clock. You did get some weak numbers on the existing home sales earlier, so certainly something that the Fed will be looking at with the housing recovery continuing to be the laggard. 0.9% is the expectation for June with a build of 11.1% year on year. And then obviously the FOMC policy decision will be the highlight of the day heading into 2 p.m. Tomorrow's GDP print will be at 8:30 during our webinar right here. So we'll try to open up the room a couple of minutes early to get that in, guys. But the second quarter advanced print is expected to come in at 2.5%. Remember, the advanced print, as backwards as this seems, guys, I don't make up the rules, they do, is actually the second read, right? So there's the preliminary, there's the advanced, and there's the final. So the advanced is actually the second read. And we are expecting a pretty nice upward revision from negative 0.2 to 2.5% for the second quarter on an annualized basis. Personal consumption expected to see a nice pop up here to 2.7%. And those will be hitting the wires at 8:30 sharp tomorrow morning. So we'll be getting in those GDP revisions right at the start of tomorrow's webinar. All right, guys, we'll wrap things up here. Best of luck trading today's interest rate decision. Look, if you're a little bit hesitant or you're a little bit skittish right now, sit on the sidelines. Let us clear out some of the dust. Keep in mind one other thing, okay? You are heading into the close of the week, the close of the month. The closer you get to Friday, the less emphasis you want to put on near-term price action. You get some flush outs, you get some portfolio rebalancing. It can really mess with near-term price action sometimes. So keep that in mind. We'll try to keep you updated on the SB Squawk. Till then, best of luck trading, guys, and we will see you tomorrow morning. Cheers.